Good morning, traders. It is Wednesday, the 2nd of March, 2016. It's 8:01 a.m. Chicago time. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall picture from the overnight session to set up the base for today. With crude being down 1% plus 1.1% right now, gold being slightly up, treasuries being U.S. Treasury futures being slightly up, the Bund is slightly down. Asian markets, however, super strong. The Nikkei went up 4.11%, the Hang Seng 3.07%, and the Shanghai up 4.24%. That's pretty big move up. The Japanese yen futures lower by 0.11%. The Eurozone equities, DAX is up just over flat, 0.16%. The FTSE's down 0.42%, and the CAC 40's flat. U.S. equities are down from yesterday's close by 0.25, 0.28%, and the U.S. dollar index up 12 bips. So this shows us, this has given us a sentiment that is mixed, with Asia dominating the session early on and holding on to its gains. The market allocation is mixed today. Yesterday was a pretty big rally day. But at the same time, yesterday, both Fitch and Moody made announcements. Moody says that it has put China under review for a downgrade. Also, China's steel use fell for the first time since 1996. That's 20 years. This is the first time that China is using less steel. Also, UK construction PMI missed. Looking ahead at today, what's expected for today, we're looking for ISM New York at 8:45 Central, 9:45 Eastern, no expectations. And then, of course, the energy, the crude oil numbers at 9:30 Central, 10:30 Eastern. U.S. gasoline inventory is expected at negative 1.5 million. Distillate inventory is negative 1.5 million. Crude oil inventory is expected to be up 2.75. Prior was up 3.502 million barrels. As far as speakers, we have Fed Speaker Williams at 9 Central, 10 Eastern. ECB Speaker Kerr, and not at 11 Central, noon Eastern. And then we have Fed's Beige Book at 1 Central, 2 Eastern today. That's what's on deck. Let's switch gears and look at technically where we stood yesterday. But as always, let's start with accountability in a way. Here's your Trader Bite from yesterday. This was the primary expectation. We set out to, the expectation is for a choppy open, a fairly choppy open. We are looking for a move lower, as shown here, a move lower towards the prior day's close. We're opening in a very turbulent area, meaning the expectation is for just back and forth. So the expectation is eventually it would more likely, given the neutral extreme, again, the prior day was neutral extreme on Monday. The expectation is we're likely to revisit that low, or at least move towards the close. But the overall sentiment and the overall stance of the market was very bullish. So on a push lower, we expected price to entice buyers to step in, and then buyers would likely take it to our key target of 64.75 and beyond, right? 64.75, and then 72 is the MCLVN beyond there. I'll show you that in a minute. I showed you that in a video yesterday, but I'm not going to replay the video. So that's what we expected. Now let's take a look at what we got. And here's what we got. We got, well, it's more obvious on this chart actually. There we go. So there it is, the open, and then the market starts to shift downwards. Fairly choppy open here, and then the market starts to shift downwards towards the 38. That's where I drew it, in the 38 area. It pretty much hit it to the tick. That's not normal. It's just a coincidence. Pull back to the mid. A nice setup there for continuation potentially, but the caveat is that we're likely to find buyers in this area. 38 is a combination of levels coming together in a confluence. So the expectation was not too much on this sell against the mid early on. We have a one tick failed auction here, a one tick failed auction. The market immediately pushes through a shallow pullback, and then we start the race back up as expected. And then eventually we would look for it to hit the 64.75. There's the line for the 64.75 up there, and the market slowly got to it, and there it is. It pushes through. This is an MCHVN. An MCHVN traditionally, or in general, the market doesn't just stop at it and turn. It's not a rejection point. It is an acceptance point. Generally, the market pushes through and trades through it for a bit, consolidates before it does its continuation. That's the normal or the expected behavior at an MCHVN, and that's basically what we got here. See how it's chopping there? It's building more energy for the next leg up. So as it continues higher, let's adjust the scale here. As it continues higher, the next expectation up would be 72. 72 is the low volume node, the MCLVN. We missed it by 2 ticks on the first try, pulled all the way back, pulled back all the way almost to 64.75, and then it continued on. And if you look at how we closed yesterday, we closed right on the top tick essentially. We closed very strong. We shifted the point of control up. We traded a tremendous amount of volume here at this price on the close. It traded a lot of contracts at this 75.50 area. It showed up very clearly on the S5 Bookmap order flow software that I use, and it just continued higher, and it finished right on the top tick essentially. And when that happens, the expectation is for a continuation overnight. What that means basically is that the auction ended. The auction was forced to stop before the price discovery was complete, and yesterday's price discovery to the upside was definitely aggressive, and it was definitely incomplete. There's a cluster of energy up here. Remember, for every buyer, there's a seller in futures. A contract does not exist and is not created, and there's an infinite number of contracts that can be traded, which makes futures quite different from stocks, not to mention the fact that futures don't have day trader rules and things like that. However, they are more risky and much more leveraged. But overall, for every contract that is sold, a contract's bought, and all of this energy. So for every contract here, all this volume, there's somebody that is holding a short position, and so that creates energy for the continuation higher, and we push to 84.50. We stopped just a tick from the next naked point of control here at 85 quarter, and then the market turned over and pulled back in the overnight session. So this has done what it's expected to do on the extended trading hour session. The market did not drop as far as I would have expected. I was looking for the market to push down into 64.75 before the open today once it takes out the high. but it is heavy on the downside. So this profile here looks very heavy on the downside and looks cut off at the bottom. A weak looking profile. I'm expecting a touch or test of 68.50 on the open today. I'm looking for responsive selling down into this area, and then you need to watch out for anything below 64.75. We're likely to see it take a run down fairly far down into the 56-54 area beyond there. So that's how things are shaping up now. One thing to be said though is the mixed signal that we got between so let's bring this profile back to where it was. Here we are. So you recall I drew this yesterday so we could see that the market has moved from the upper distribution to the lower, and it opened in the upper distribution. So the expectation is for it to hit the MC point of control during the session, and then the expectation is for this large distribution to dissipate upwards. That's the whole point behind yesterday's hypothesis. But the mixed signals we got is that we pushed higher on Monday and we ended up on an extreme neutral extreme close to the downside and then gapped up. So even though this, the expectation was for it to push to 64.75, I did not expect it to turn into a very strong trend day. If we look at the market profile view of this, you can see a lot of single prints across the board. There are singles down in the 60 area, 56 area, all the way down to 47. The market did not auction areas below very completely. It has not. It has fairly weak structure below. So I know I did warn about shorts last Friday, I believe, and maybe on Monday. I don't remember. I did warn that if you're short, you need to step back or cover or hedge or something. But this has pushed up pretty far, pretty quickly. So the expectation is that today it is likely to make that higher high at some point. I'm expecting this high to be taken out. Again, the auction's incomplete. We're likely to push higher to look for those sellers to step in again, but I'm expecting it to pull back and consolidate a little bit into the 1950 area before it continues higher into 1990 and the century figure. The quirky thing about this is that we have rollover in a week. Next Thursday is rollover for U.S. index products, and then we have expiration the Friday following that, the third Friday of the month. So this is approaching a major strike price just about a week, 2 weeks ahead of expiration, and so there's a lot for the OTF to do here, hedgers and long-term position traders, bigger traders, to do here going into the expiration. So the expectation here is that it's likely to continue to be volatile, and I am expecting it to pull back before it continues higher. This morning, the overall view, as mentioned earlier, the overall view is for this to continue lower. I expect it to tag 68.50, potentially chop around, push up, take out the high, and I expect it to pull back in and then potentially continue lower below 64.75. If it gets below 64.75, you're in a low volume node. This is probably not a good area for you to fade. In other words, buying it below 64.75. The probabilities are not on your side. You can always make money fading the market, I'm sure, depending on the time frame that you're trading. The shorter the time frame, the more probable that you can get something out of a trade going the opposite, the greater forces in the market. But my point is, if you get long in here, don't stick around very long. It's likely to fall through and get down to the area where it has based. So when we extend this profile out, let's extend this profile out here. You can see that the distribution is cut off right against that 64, 75, 63 area, and then you start coming into the high volume node, which puts you right back at this MC VPOC of 5250, and that's the expectation. So once it drops below 64.75, just be cautious. It's likely to push all the way down into the 53.52 area. Again, it's tough to say today which way it'll go after such a big run yesterday, but with certain habits, the market has certain habits. Once it pushes as far as it did yesterday, it's likely to take a rest. However, this high is likely to be taken out today, in my opinion. Anyway, I'll leave you with that. This went on a little bit longer than expected. Hopefully, as always, you're gaining something small at least every day by understanding how the auction works and then applying that into your trading. Good luck. Watch your risk. Again, you're here, and I'm sure you're listening to me because you want to be an independent and profitable trader. And the chances that you would be that are minimal if you let a trade like a short yesterday run away with 30 or 40% of your account. It just makes no sense to do that. Your chances, your risk of ruin is very high, and you can't call yourself a professional by sitting there and being stubborn against the market. Just be as objective as you can. Be aware of your emotions. It's very difficult to do, but it's something that you practice and get good at. That's what my prop traders did. That's what I've done over the years. Just be aware of when you're getting angry or getting emotionally involved with the market. That usually does not pay. Good luck.